You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Thursday, April 18th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Thursday. The first thing to know is it's Mueller time. Oh man. Today sees the publication of a redacted version of Special Counsel Robert Mueller's report into suspected collusion between the Trump campaign and Russia during the 2016 election campaign. Justice Department officials will deliver the report to Congress sometime between 11 a.m. Eastern and noon, according to the Wall Street Journal. Attorney General William Barr will hold a press conference at 9:30 a.m. Eastern before either Congress or the public has seen the report. The second thing to note today is stocks are set to open lower. Zoom and Pinterest price IPOs are above the range. U.S. markets are set to open lower Thursday after weak purchasing manager index reports from Europe and against a backdrop of mixed news from the high-profile Zoom and Pinterest IPOs. That was at one point pre-open. Image-sharing social media company Pinterest was set to debut on the New York Stock Exchange a day after it raised approximately $1.4 billion in its initial public offering. That was above the top end of its range, but still well below the valuation implicit in its last private funding round. Video conferencing company Zoom Video Communications Inc. was also started to start trading after it raised $751.3 million in its IPO. The third thing to know today is Philip Morris, Union Pacific, and Amex are to report Q1 earnings. Philip Morris International and Union Pacific head the billing in earnings season today, while American Express, Danaher, and Schlumberger also report ahead of the open. Intuitive Surgical will chip in after the closing bell. In Europe, earlier consumer giants Nestle and Unilever both posted stronger than expected sales growth in the first quarter. The Swiss company shares hit a new all-time high in response. By contrast, pipeline giant Kinder Morgan's revenue fell some 8% short of expectations when it reported after the closing bell on Wednesday. The fourth thing to note today is retail sales are expected to rebound. U.S. retail sales data due at 8:30 a.m. Eastern, that's out, are expected to show a rebound of 0.9% in March after a sharp drop in February. Data on jobless claims and the Philly Fed Manufacturing Index are due at the same time. Also on the docket, Atlanta Fed President Raphael Bostic is to speak at 12 p.m. Eastern Time. Philadelphia Fed President Patrick Harker said Wednesday that the U.S. Central Bank may still be able to raise rates once this year and once in 2020. Earlier in the day, the flash reading for the composite Eurozone Purchasing Managers Index showed that growth in the bloc slowed in April for the second straight month. The fifth thing to note today is return of Rocket Man. They're creative with the headlines today. North Korea said its test fired a new type of tactical guided weapon, ending a moratorium on weapons tests that it had observed since November 2017 and reviving concerns about the communist country's ambitions. There is no indication that the weapon used nuclear material. All the same, the dollar rose 0.5% against the Korean won, while the benchmark Kospi index fell 1.4%. The report took the gloss off news that the U.S. and China were looking to agree on a trade deal by early May with a view to a presidential sign-off at the end of next month. Our second story today is from CNBC.com. Amazon is shutting down its China marketplace business. Here's why it struggled. Queenie Liao, an office worker in Guangzhou, China, shops online several times a week. Alibaba's Taobao and JD.com are her go-to platforms, but it wasn't always that way. I used to use Amazon a few years ago. Amazon was one of the first online shops in China, and a lot of friends told me that the things from Amazon were much more trustable. That's why I used it, Liao told CNBC. Taobao and JD have more items now. Her shift in attitude underscores one of the major reasons why Amazon is thought to be struggling in China. The U.S. e-commerce giant now plans to close its domestic marketplace business in China. We are notifying sellers we will no longer operate a marketplace on Amazon.cn, and we no longer will be providing seller services on Amazon.cn, effective July 18. This is a statement from the company referring to its Chinese language site, according to the Financial Times. Over the past few years, we have been evolving our China online retail business to increasingly emphasize cross-border sales, and in return, we've seen very strong response from Chinese customers. Their demand for high-quality, authentic goods from around the world continues to grow rapidly, and given our global presence, Amazon is well positioned to serve them, the company added. Our second story of the day is from investing.com. Bitcoin going mainstream might hinge on New York crypto license. Intercontinental Exchange has been facing resistance from federal regulators over a key part of its ambitious plan to bring Bitcoin to the masses. Now the owner of the New York Stock Exchange is turning to state watchdogs to get the project over the goal line. ICE's plan is to create a highly regulated Bitcoin ecosystem that would encourage pension funds, endowments, and other institutions to invest more money in the space, and make it much easier for consumers to buy products with the cryptocurrencies. The venture, announced to much fanfare in August, has lined up big-name backers, including Starbucks and Microsoft. But the launch date for the project, known as BACT, has been delayed for months because of skepticism from the Commodity Futures Trading Commission, the U.S. regulator that polices Bitcoin futures. The issue that has made the CFTC the most concerned is how clients' tokens will be stored and thus safeguarded from possible theft and manipulation. This is according to people familiar with the matter. To placate the agency, ICE is considering seeking a license from New York financial regulators that would permit BACT itself to hold custody of customers' tokens, said three of the people, who asked not to be named because the discussions are in public. Should ICE secure a state license, it would still need sign-off from the CFTC on the broader BACT project. And our final story today is from investing.com. Oil prices rise slightly as declining inventories and supply cuts reports come out. Oil prices are trading slightly higher Thursday as declining U.S. inventories, supply cuts by major producers, and U.S. sanctions on Venezuela and Iran all lend support. Global benchmark crude futures were up 0.4% at $71.91 a barrel by 8:01 a.m. Eastern. U.S. West Texas Intermediate crude futures were up 0.5% at $69.04. Prices found support after the Energy Information Administration reported the first drawdown in crude stocks in 4 weeks on Wednesday. Crude stockpiles fell by 1.4 million barrels last week after a build of around 17 million barrels in the previous 3 weeks. The fall in oil prices came despite a small week-on-week draw on U.S. crude inventories, as observed in the latest EIA data, partly since imports slumped back towards the 6 million barrel per day mark, while implied crude supply numbers remain firm, Vienna-based consultancy JBC Energy said. And that, ladies and gentlemen, is news you can use. For today, April 18th, 2019, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.